Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, the 27th of January, 2021, about 5:40 p.m. Central Time. What a day. I have been up since like 3:34 anyways, but I couldn't even do my morning flash video as I was addressing the issues of the market and what clients were going through. Remember, I do own a brokerage firm, a division, and within that division, I have to be on top of things. Now, your advantage with me is I have owned at the same time brokerage firms in futures and in the stock market. And in doing so, I learned an awful lot. I learned how people will sell things they own to hold on to things they shouldn't continue owning. How's that? In other words, I'm not going to take a loss, so I'll sell that which makes me money to hold on to that which I'm stubborn. I'm not going to take a loss on that. I know it's good. You don't think that goes on? You are so sadly wrong. That is very much what goes on. We are in a washout phase in the stock indices right now. You ended a cycle to the upside, after the fact as you look at it. So that move that we recently had in January, day after day of new highs, you've stepped out of the trend. It doesn't mean the market's in a new bearish era. It means you ended that and the liquidation is going on. And it is something you got to pay attention to. You also have to understand that as people get scared, and we've been in nothing but up markets, they start dumping everything. Does that mean you try to take advantage of it or put your hands in your pocket and don't get caught in these things? Well, that's what you do. Today, I had nice winners in the Russell in my subscriber videos, but I lost in a couple of other trades. Nothing large, very under control, was not in a problem. Profits offset the losers, by the way, but it doesn't always work that way. The key is you were coming in today to the FOMC meeting. That's what traders were focused on. That isn't the right focus, as it turned out. It became the game of GameStop, Express, and go on. AMC Theaters going up hundreds of percentage points. And go on and on. Whatever the big short open interest was, got caught. Tonight, in my written market letter, I'm including the link so that you can take a look and understand how short open interest can be larger than the amount of stock outstanding on individual stocks. People thought, good friends of mine that are brilliant, well, how could you be short more stock? Don't they have to borrow it? How does that work? It's called a domino effect. It's been around forever in the stock market. It's the way that you keep liquidity. It normally works just fine. You've got this new phenomenon, these Reddit social media traders that group together somehow. How they do it, I don't know, but it's like herd mentality, and they attacked recently these short sellers, and it's created a real catastrophe in the market. But for the week, you're down 3% so far. The week's not over. You're down 122.5 points. That's a lot different than yesterday when we were still up 1/3 of a percentage point. When you take a look at this break, how could you think it's anything but after the fact? And I want to make that clear. After the fact that you made a trade top and now you're getting the reaction. Let me take off these 2 days. You still had your higher lows, your higher highs, you were making highs. Yeah, you were getting a resistance area, but if you saw that the market was coming down from there, congratulations. I don't think most people did. But as the day broke through this low, game changed, and you'll see why. That's a swing line low. So this is how you looked going home. You had higher lows, higher highs. The first thing I'm looking at, do you break that? That means the swing line has changed on you, and that's what happened, all right? What else? I look at moving averages. This is how you looked again last night. In order to buy this market, unfortunately, you were going to buy it under the 18-day average, which is a rule I don't believe in. In other words, I don't think you ever do that. It's what happened, all right? And tonight you're even a little lower as the Johnny-come-latelys are looking at their account overnight going, oh, I should have paid attention. I hear that all the time. That, by the way, is what's the wrong thing with the Robin Hoods and these discount traders where you trade in the stock market for free. You don't have a voice to talk to. In futures, you have a voice to talk to. You want to pay a little extra? You get an account manager. It's not a lot. In the scheme of things, Typically, for the average person, it's not about commissions. It's about being right or wrong. As long as the commission is fair, reasonable, that's been my experience. Doesn't mean I'm right. In the swing of the market, well, you can now see that you're caught still in the Bollinger Bands. You're out of the trend. And when you look at momentum, it plunged. Now, do we have any warnings of this? This is how you looked last night. You did not have that warning coming in on the slow stochastic. It unfolded during the day, and with the reopen tonight, watch it how far it's dropping down. You're knocking on the door already of being oversold. Any reading under 30 does that. You could wake up in the morning and this market is higher. Don't be surprised. The selling pressure, as fast as it comes in, goes away too. When we look at the NASDAQ, it's the same thing. The market, if you look at it coming in, here's the advantage. Do you buy against the Bollinger Band? No. So the question is, on the first break, are the pros going to buy it? I think they did. Market opened steady to higher. I think they bought it, and then they eventually bailed on the trade. They lost their embedded reading position. Now, did they get the embedded reading? Day 1, 2, that's Monday, 3 is Tuesday. You lost it today. 69 reading. I think the pros are out of this market. I think any readings under 79, they're throwing in the towel. Dow was in a downtrend coming in today. It's hit its target. What do you do the first time you hit a Bollinger Band? I teach. I think the pros take money off the table, jam their stop way down. If it wants to continue, fine, but they won't give it much latitude. If it wants to keep going, they're in there, but they've made their play. That's what I think. In the Russell, same thing. This was, to me, my favorite of the indices. That was Tuesday. This is today. Game over. I don't care what it does here. You ended this up cycle. That, to me, is the important thing. Let it rebuild. That's how I look at it. And when I go to the daily charts, we'll see what that does, but I'm not covering that here. I cover that for my paid subscribers. So we get to the VIX, and the VIX closed today at 37 near the high up here over the upper Bollinger Band. Each time it's done it recently, it has failed to stay up there. You have to go back to the October period where it stayed over when it broke out of a narrow range. This is a narrow range. So is it going to be another breakout? Don't know, but it's certainly nothing you want to be short. That's the part I'm going to say. Do you buy over a Bollinger Band ever? What do I teach you? Never. T-bonds. Why would one have gone into the government report? You know, I teach not to. You're overbought in an uptrend. Same thing in the 10-year note and the dollar index. I've been saying the pros, I think, are buying the market. I think 90.02.5 is going to be the key. I did not expect it to get up to that number today towards the upper Bollinger Band. But there you are. As the panic set in, people bought the dollar. They did not buy Bitcoin. They did not buy gold. They bought bonds and they dumped everything else. That's what was going on. I talk about this at 5:30 to 5:40 every morning. So if you're one of these people that before the markets get rocking and rolling, you want advice on what the futures market is doing, what might it do, ideas on short-term, longer-term trades, news, well, that's my job. You bounce your own thoughts off my video. It's that simple. I give you detailed analysis using moving averages, slow stochastics, window envelopes, and there's one other big thing in there. Forgot myself, but there's 5 studies, the swing lines, that's for sure there. But that's what you use. And as you're working with them, it's so simple. When you're only using 5 indicators and they're supposed to complement and they don't each other, you don't have a trade. I cover the markets in this exact sequence. There's a slide bar and you slide around the video in the morning. Let's assume you just want to watch the metals. Slide right to it. It'll tell you what's going on. Each video about 20 minutes long. There's a cost for it, $7.95 to get yourself started. You're not committed to a year. You're not committed to anything. If you decide to continue, great. How do you get it? Simple. Go to our website under the word research. You'll see the different plans that we have. You can sign up for it there. $7.95, it's not even a tick in the futures markets. 26 videos a week. You have a good day.